Are you new or seasoned in the real estate space and you're trying to understand how to gather data, whether you're a researcher, an agent, or an investor? Well, I'm going to show you how to actually do that today. I'm going to give you the tools and tips you need for the real estate data solutions in 2021. This is a presentation that I gave to Florida Atlantic University MBA course in their real estate class, and I'm going to share that with you within 2 segments. What you're going to get from this is really good insight into what data tools are currently available, how to use data to find leads for investment analysis, and then ultimately how you can aggregate data together to actually monetize it. If you don't know already, my name is Ariel Herrera, your fellow data scientist with the AnalyticsAriel channel, where we bridge the gap between real estate and technology, which are both my huge passions. So before we go into what data is available, why should we even care about data? Well, by having the right type of data available, we can actually make data-driven decision making. So instead of randomly saying, well, this house looks good, I'm just going to, put 20% down as an investment for it, that's not really good criteria. You should really understand, is the house cash flowing? Is it a good deal based on a number of bedrooms, bathrooms, square footage, style of the home? There's so much that goes into it. And by having that data, it empowers us to not only be more certain of our decision, but to also be able to compare, is this good or is this bad relative to the market? As well, having the right data helps to reduce costs, increase speed, continuous improvement, collaborative decisions, and ultimately planning. So we're going to be covering in the first segment is talking about market data, what current data is available, economic trends, lead building, and in the second half, we're going to go into investment analysis, data monetization, which really excites me, and key takeaways. So a little bit about me. I graduated from Rutgers University for my undergrad, go Scarlet Knights, and have my master's degree in info systems from NJIT. I am an avid Yankees fan, really hoping we can make that playoff run. Originally from the Northeast, so I'm also a Giants fan as well. Currently work at Calendly as a product data analyst. And I recently moved to Tampa about a year ago, which I absolutely love because I'm a big beach person as well as hiking and anything else outdoors. And of course, I have a YouTube channel, which if you haven't subscribed already, please do so you get the latest content for analytics and real estate. So how did I begin my journey in real estate? I was commuting in and out of New York City, 2 hours round trip, and I thought, wow, I got these degrees. I've really worked hard the last, 20 plus years of my life. And is this really the top? Is this really what I've been working so hard to? And at that stage, I said to myself, no, I need to find other alternatives for passive income streams. So if you've done this path before, you would know a lot of things are out there like day trading, buying and selling off of Amazon, but those didn't really interest me. What really gauged my interest was real estate, being able to actually understand the tangibility of it, and also be able to provide housing to others. So I decided into this journey to actually see if I can evaluate properties on my own. And I noticed that there was a huge gap between real estate and data. It's all very siloed versus being all in one. So for example, I thought initially I could just go to Zillow, click maybe an Excel file that's for Tampa, Florida, and just get a dump of all properties that are currently for sale or that are just in the whole entire city itself, which is completely wrong. You cannot do that. The data is segmented and siloed. However, we do have a leg up into data availability than other countries in the United States. So a little bit about the market data. So U.S. housing data is centralized in the MLS, multiple listing services. So different territories within even different states will have all of the information on properties for sale previously sold within one single database. Then you have aggregators like Zillow and Redfin who have been able to connect that across the United States. And what's really, really cool is that that data is available for free through apps and through their websites. So it's used for home buyers, maybe first-time home buyers, as well as real estate investors. Now, this is really critical to understand whether you're in a data space or not. Just by knowing this, you're a leg up if you're ever communicating with a data analyst or a web developer, just by understanding some basic functions of data. So overall, there's two data sources that are available: structured and unstructured. It's as easy as it sounds. Structured data is something that already has rows, columns, or an easy way to extract the data. This is usually seen in Excel and also APIs, which I'll get into that in a moment. And then unstructured data is data that's still very informative, but isn't in a way that's easily accessible. This includes social media as well as websites. But as you'll see, we do have tools today that allow us to take this unstructured data and get a leg up in comparison to just using traditional methods. So what actually is an API? So an example would be the census. They post data, US government census, they post data on information like population trends year over year or month over month given the region. So say like the Northeast. Well, if they have that data available in an Excel file and they just upload that every month, that's useful, but that still leaves a lot of room for error because you have to download the file, maybe add some calculations to it, bring it into your own database. And where APIs come in is that you don't have that manual process in between. This is programmatically available. So for someone like me who knows how to program in Python or even use tools like Zapier, I can extract this data more easily and funnel it into my data source. So the real benefit is that you could avoid manual effort because you can feed this data into a process. And then web scraping, how does this come into real estate, right? Like, aren't we trying to just understand real estate investments and how to evaluate a property? Well, in this sense, when you're looking for deals for a property, which we'll get into for the lead building section, it's really critical to be able to get untraditional leads of people who may be looking to buy and sell their properties. And if we use social media like Facebook, Twitter, Craigslist, we can get insight into properties that are maybe not seen on Zillow and Redfin. Web scraping is basically taking all the text on a web page and just pulling that out. So for example, with Facebook, if you love to go on Facebook Marketplace like I do to try to find some really cool like furniture for a good price, you'll know that there's information on what the furniture is. For example, like a desk, the price, $15, and maybe some photos around that. Well, that's unstructured data. However, if we were to use web scraping, we can set up a column that says for everything that's in the marketplace, label what that title is, label what the description is, and we could start to structure it in a way that we can analyze it as a whole versus at one at a time. All right, so now we're actually going to jump into some data. So I'm going to be stepping in and out of the PowerPoint. So for economic trends, it's really important to be able to get a gauge of how and what things are going on within an area to understand on the micro and macro, what are the effects of this. So for example, if you see a certain industry, a lot of people are losing their jobs, this can have a downward effect on maybe not being able to pay rent on time and some other things. So it's important to have a good gauge at looking at these potential effects, not just strictly looking at a particular area at the given time in the moment. All right, so let's actually test to see if we can make a hypothesis and we can actually verify it with data. So our theory here is if lower interest rates spur home buying, then inventory will decline. So as interest rates get lower, more people are coming onto the market because it's going to be a lot more affordable to buy a property. And if more people are trying to take up inventory, then of course there'll be less inventory available. So our action is that we want to be able to evaluate single family home inventory and interest rates data and see if there's a correlation between the two. And some resources that we could use, and we're going to walk through, are Zillow Economics, Realtor data, and Fred data. So let's step into that right now. Awesome. So now I'm actually on Zillow's research data site. So it's really cool that Zillow has its own dedicated line here where it has Zillow research, data, visuals, and some more information that I definitely suggest that you look into. However, this focus is for data, so I'm going to quickly review some of their features they have here. So for home values, many of you may be familiar already with Zillow's Zestimate and their scores. So what's really neat is that if you wanted to get a sense of how that is throughout regions in the United States, you can. You could select what data type. Do you only want to evaluate, say, 2-bedroom properties? Do you want to look at just single families, condos? And then afterwards, you can actually drill down even to the neighborhood level and zip code in order to identify what those home values look like. They have additional information on home values forecast, rentals, and then what we're going to be focusing on here is inventory. Where we could get is for sale inventory, and there's different variations between smooth and raw. As well, we can look at things like newly pending, median days, and more. So say we just select what's on default. The only thing that's here it's kind of limiting is that it's only available for the Metro and US view. So you can't get as granular as zip code. So like if I wanted to really drill down into a Tampa area, like the specific zip code, can't do that with this. There's other ways around it, which I could show you. So we'll download this, and then what comes next is an Excel file. And this data goes back to 2018, which is fairly good. It has information on the region by size, so New York being first. Then it has the state, and it has inventory, which at this stage, it just looks like a bunch of numbers on a spreadsheet, but using visuals is always a great way to depict it. So if we go to the second, what I created, the second tab, is just filtering on states from Florida, looking from 2018 month over month all the way to June, and just doing a quick chart on inventory. And as we could see around this stage, which it says 331, so when the pandemic began, we see a real drop in inventory, which makes sense because a lot of people, one, weren't willing to put their houses on the market because they were worried of contracting COVID, and then also a lot of buyers looking to upgrade and move out of a smaller space. We could see that this drop is very large for Miami-Fort Lauderdale area, which is the one that has the largest size, and subsequently for the other areas as well, some more drastic than others. Well, what we could do as well, now that if we have this type of data, say if we wanted to look at detail like interest rates, we could then go to Fred data source. So Fred's really, really awesome because they pull in economic data. You can use it all through their webpage, or you can use it as an API. And right here, we're looking at the 30-year fixed rate mortgage average in the US. They also have it granular going down even to the county level. This is 30 years, but I focused in on 2019 and on, and you could see as interest rates start to drop, and very, very low for January of 2021. And we could see down here, the source is coming from Freddie Mac, which this is so critical because instead of us having to go to Census, Freddie Mac, crime tab on FBI, all these different websites that have data, Fred basically just pulls it all into one source, which is really neat. So I'm not going to do it here, but just wanted to give you the idea. If you're, say, a researcher, maybe you're university or you're in a company, you're trying to understand trends and how it's affecting micro and macro level, then definitely try to use Zillow's housing data, and you could compare it against other things outside data sources like Fred. And another one that's really, really cool is Realtor.com. They also are an aggregator of MLS data, and they have their own research community. So they have data, research, which you could look at things like hottest markets, local market trends. Again, definitely suggest to brief through these in a little more detail. However, what I want to touch on here is that they have information. You can actually reach out to some people for more information. And they have a little bit more rich data than I would say Zillow. So yes, they have inventory, but it's more granular by week. You could get by week and by month. And then as we saw with Zillow, they had their Zestimate scores or their aggregation of home values by zip code, but not for inventory. Whereas here, we could see for inventory, we can actually go down to zip code with their data. And it seems like this is updated monthly, and they also have historical information. Realtor also calculates things like market hotness, which I find very interesting, which is also pulled into Fred. And what's really neat is that you don't have to guess what their columns mean because they have a data dictionary that gives you an understanding of what data is available and what it actually means. So I highly suggest to touch upon that. Great, so we covered economic trends and now we can move forward to lead building. How do we use data to help with lead building? So first, just as an overview, there's two types of deals that go on, which is on market and off market. On market is, say I'm a seller, I'm looking to sell my property. I want a real estate agent to represent me so that I can have a pool of possible buyers to look at my property and potentially put an offer down. Whereas off-market deals are not happening on the MLS. So you're not going to see them on Zillow, Redfin, Realtor. And it could be for a variety of reasons that the seller or buyer is looking to do this type of deal. So our theory in this case, which we're going to use data to prove, is if we can find sellers before they put their property on the MLS, then we can buy properties at a discount because there'll be less competition there. So how do we actually use methods in order to identify what sellers are available and actually have quality leads? So the resources we're going to touch on are ListSource, PropStream, scraping, things that we could do. We could scrape county pages, which I have a video on doing just that. Facebook, Craigslist, and then tools, which is for those of you that are not as technical, you're in luck because we're in the year of 2021 and there are plenty of tools available and hired hands for cheap if you want to be able to pull data from a website. So let's actually look at some of those sources. All right, so the first source that we're going to tap into is ListSource. So what's really great about the whole idea of lead generation is that it's not just only for real estate, it's for a lot of different industries. So you have some websites available that are targeted to real estate and not, that actually provide information on homeowners. So particularly for ListSource, quickly what they say is it delivers the data you need to gain homeowner intelligence and better target potential customers. So how is it actually used? Well, you have a search and you have some criteria. So if I go to a previous search, which is Tampa foreclosures, we can see here that on the left-hand side, we can get granular as to what city we want to look for foreclosed properties. So we have Brandon. So say for our strategy, we want to find maybe sellers that are going into foreclosure and they have a lot of equity in their property. Maybe they could do some type of seller financing or other type of strategy like subject to. And what we want to do is target those that have a lot of equity in their property. So we're looking at loan to value and filtering on less than 20% there. Then say if we know our market and we know that in the Brandon area, Florida, that people are most likely to want to rent or buy properties that have at least 2 to 3 bathrooms and 3 to 4 bedrooms, as it's more of a family area. And we want the current home to have a certain value, again, based on your market. Year built, maybe I don't want to work or have to put work into a property that's too old because they likely maybe have a foundational risk or sinkhole risk, a lot of different options there. And there's more filters that you can do. So I want you to get from this is that if you're looking to build leads, people who aren't selling on the MLS but can have a high interest to sell, you can use filters based on your market, and then you'll be able to get a count, which is on the left-hand side. After these filters, it's 144 people, and I can actually pay to buy this list, which if it's 144, I think their leads are definitely less than $1, so it shouldn't be more than $100. That's one option to go about it. Now, what if you want to do a different approach? So say Zillow. They have for sale properties, but they also have for sale by owner. So say if I'm a property owner and I don't want to go through an agent and have to pay fees for seller's and buyer's agent, then I can actually post a property myself through Zillow. And that can be really enticing for, say, someone who's trying to build leads, because as a quality seller, you already know this person wants to sell. And maybe you can get to them first and be able to acquire the property at a discount. So as we see up here, there's a site called Apify, and there's plenty of other sites similar to it, which developers, so this person on the right-hand side, Peter, developers come up with web scraping tools or bots in order to pull data. And then all we have to do from our end is put in some criteria and be able to extract that. So specifically, this one is a Zillow real estate scraper. You input what is the city or zip code that you're looking to search for, and then you could get the data back into a structured format like HTML, Excel, XML, and more. So the way you would go about this is you would look down here and you would see that it takes an input and there's going to be an output. If we look at the input, what we need to have is a search criteria. So for example, it says Los Angeles. If you're looking for properties in Los Angeles, then you could do even more. You don't have to, but you can set things like the minimum date that the property was listed on Zillow, as well as maybe start URLs, like exactly what that URL is of the location you want to search for. Then if we go down to output, we see that we're going to get back information about the property itself, like street address, state, zip code, and we're going to get information on bedrooms, bath, photos, and description. Now what's really neat about this is if we go to the input tab, we can see that it's optional, but we have the availability to only pull in data for sale by owner properties, in short is FSBO. So I actually tried this out. It's fairly simple. You don't need any programming experience. And I was able to export an Excel file that has information just literally within seconds, able to grab all the for sale by owner properties and their street addresses, which is really neat. So it's an alternative way to drill down on sellers that are interested to sell their property and are doing it off market. Or I guess technically this is on market, but it's not going to get as highlighted as a property that's for sale and it's using an agent. So one other data source I did want to touch on that I actually haven't explored too much as of yet is PropStream. I've heard a lot of hype about it, especially in some of the bigger pockets podcasts. And I know it's similar to ListSource in that you could filter down on criteria to get a list of potential sellers. It may have some additional tools as well that can help to make informed decisions. So the real part about real estate that makes it tricky but also so interesting is that, as you see, we're going through this and data is everywhere. It's not just in one single location. So if you routinely try to understand what data is available, where it is, it might change like the actual source itself, but you'll have a better understanding of how to quickly search for it and use it for your use case. So in part 2, we're going to actually go into more detail of what some of the data sources are that you could use for investment data analysis and to actually potentially make your own data monetization tools. If you haven't already, please subscribe.